If the house always wins, shouldn't you just buy the house? Of course, that's not how it works. Welcome back to Casino Love. This is the 7th episode in our series where we take a factual look at publicly traded companies in the iGaming space. Today, we are looking at Catena Media. As always, this is not a financial advice. We are not telling you what to buy, what to sell, or what to avoid. Our goal is simply to look at the company, understand what it does, and go through the latest official informations. One important point right at the start. Catena Media is not an online casino operator like Flutterer and Tane, and it is not a game supplier like Evolution or Playtech. It sits in a different layer of the ecosystem. It is an affiliate marketing company. In simple terms, it tries to attract users through content websites and digital products, then sends those users to sportsbook and casino operators, and gets paid if those referrals convert. So first, what is Catena Media? Catena Media plc is listed on Nasdaq Stockholm Small Cap under the ticker CTM. The company says it generates high-value leads for operators of online casino and sports betting platforms. It is headquartered in Malta, has a hub in Miami, and at the end of 2025, it had 151 employees. To make that more concrete, think about how many players do not go directly to an operator first. They search for things like best casino bonuses, sportsbook reviews, legal online betting in my state, or comparison between offers. That is where Catena Media sits. Its job is to build the websites, content rankings, and user journeys that capture that traffic before it reaches the operator. So for viewers, this is an interesting stock because it is iGaming exposure without directly being the casino brand itself. It is closer to the media and traffic acquisition layer of the industry. Catena Media's products are not slot games or sportsbook apps in the usual sense. Its products are media brands, comparison sites, content platforms, and now also subaffiliation platform. Its core North American consumer-facing brands include bonus.com, playusa.com, gamingtoday.com, legalsportsreport.com, lineups.com, and dlines.com. In current company materials, bonus.com is positioned as the flagship casino-oriented brand, while Legal Sports Report and lineups are among the key sports-focused products. That means many viewers may never heard the corporate name Catena Media, but they may still have interacted with one of its websites. This is especially true in North America, where the company has spent years building state-by-state online casino and sports betting content. Geographically, North America is now the story. In 2024, the company described North America as its primary market. By the fourth quarter of 2025, 89% of group revenue was coming from North America. The company's large state markets include Michigan, Pennsylvania, and New Jersey, and it also highlights Ontario in Canada. There is also a second layer to the product set now. In 2025, Catena Media officially launched MRKTPLAYS, which is its proprietary sub-affiliation platform. This is not just another content site. It is a marketplace-style product that connects publishers and partners with operators, and Catena Media sees it as one of the key diversification initiatives inside the group. In January 2026, it also launched MRKTPLAYS Plus, an expanded version with added support and partnership options. So when you step back, Catena Media today is really two things at once. A portfolio of player-facing affiliate brands and a growing partner-facing sub-affiliation platform. To understand Catena Media properly, you have to understand the revenue model. The main model is cost per acquisition, or CPA. That means an operator pays Catena a fixed amount when a referred user completes a specific action, such as registering, depositing, or placing a bet. The second model is revenue share, where Catena gets a percentage of the revenue generated by the referred player over time. There are also smaller fixed fee and alternative arrangements. In 2025, 89% of total revenue came from CPA arrangements, 8% of revenue share, and 2% from fixed fee revenue. That is worth pausing on because it tells you the business is now heavily weighted toward upfront performance-based revenue rather than long-tail lifetime revenue sharing. Management also says organic search remains the backbone of the business. In plain English, Google rankings still matter a lot. That is important because it helps explain both the opportunities and the volatility in this stock. If rankings improve, traffic and monetization can improve. If search policies change or rankings drop, performance can get hit quickly. That dependence on search is one reason the company has been pushing diversification. MRKTPLAYS, CRM activities, loyalty, paid media, and other non-SEO channels are all part of the attempt to reduce reliance on one traffic source. At the time of recording, the latest published results are Catena Media's year-end report for 2025, released on 10th of February 2026. The company calendar lists the next report for Q1 2026 on 12th of May 2026. For full year 2025, revenue from continuing operations was 46.6 million euro, down 6% from 2024. Adjusted EBITDA was 9.9 million euro, up 84% year-over-year. Adjusted EBITDA margin was 21%, up from 11% in 2024. Operating cash flow was 7.7 million euro, up 169%. New depositing customers, or NDCs, were 106,510, down 17%. Loss after tax from continuing operations was 11.3 million euro. So the clean top-level summary is this. Full-year revenue was still lower than in 2024, but profitability and cash generation improved very sharply, especially in the second half, and especially in Q4. What drove the results? This is the section where we want to stay very close to the management's own explanation. The first half of 2025 was still difficult. The company said it continued to face ranking volatility in its core search business, especially in North America. To respond, it made major organizational changes in Q2. Those changes included eliminating more than 50 roles, cutting headcount by around 25%, and removing a layer of senior management. Catena says these measures generated annual cost reductions of about 4.5 to 5.0 million euro. The company also moved toward a unified Microsoft-based tech stack and terminated legacy software subscriptions, which it says created another roughly 0.8 million euro of annual savings. Then the picture improved in the second half. Management said Q3 benefited from improved organic search performance after a major search engine algorithm update. Q3 also marked the official launch of MRKTPLAYS. By Q4, the company said all revenue sources had increased, while tight cost control helped lift margin to 30%. The biggest operating driver in Q4 was casino. In the fourth quarter alone, the casino segment generated 13.9 million euro of revenue, which was 89% of total group revenue, and adjusted EBITDA of 4.1 million euro. New depositing customers in casino rose 117% year-over-year. Management said this growth came from strong product performance, solid contributions from subaffiliation and CRM, more than 80% growth in regulated casino, and more than doubling year-over-year revenue in social sweepstakes casino. Sports was much weaker. In Q4, sports revenue fell 33% to 1.7 million euro. For the full year, sports revenue fell 47% to 7.4 million euro, and NDCs fell 55%. Management said key sports products continued to underperform, the Missouri launch in December contributed only marginally, and while the company is still investing in legal sports report and lineups, it does not expect a material upturn in sports in the short term. That contrast is very important for understanding Catena Media today. For full year 2025, casino revenue was 39.2 million euro, up 10% from 2024, while sports revenue was 7.4 million euro, down 47%. So this is increasingly a casino-led affiliate story, not a balanced casino and sports story. There was also a non-cash impairment charge in Q3 2025 of 16.5 million euro related to certain North American sports assets and Asia-Pacific casino assets. That helps explain why reported bottom-line earnings still looked weak, even though adjusted EBITDA improved sharply. Catena Media's strategy is built around three pillars: people, product, and profit. That language first appeared with the new management team in 2024 and remains central in 2026. The official message is that the company wants a leaner, product-led, more disciplined organization built around fewer, stronger brands. For 2026, management highlights several priorities. One is further diversification across subaffiliation, CRM, paid media, and emerging verticals. Another is onboarding more partners into MRKTPLAYS and deepening that offer through MRKTPLAYS Plus. Another one is strengthening North American market position. And another is maintaining operational discipline and tight resource allocation. There is also a direct-to-user layer starting to appear. In mid-January 2026, Catena launched Play Perks on PlayUSA.com, which it describes as its first loyalty program. The stated goal is to create more returning and loyal users and to expand the concept to other brands over time. Now the balance sheet side. At 31st of December 2025, cash and cash equivalents were 9.3 million euro. Operating cash flow for the year was 7.7 million euro. The company had already redeemed its senior bond in June 2025, but the hybrid capital securities remain important. Catena had hybrid securities with nominal value of 43.7 million euro at year-end, and it has chosen to defer interest payments to preserve financial headroom for technology-driven priorities. This is a good example of what makes Catena Media interesting. It is not just about revenue. It is also about how management is trying to reshape the business model, the cost base, the capital structure, and the product mix at the same time. There is one more factual point worth making because it is central to how this company should be understood. Catena Media itself makes clear that organic search is crucially important and that the SEO-based nature of the business exposes it to revenue volatility when search engine algorithms change. It also notes seasonality in sports betting and uncertainty around some areas, such as social sweepstakes casino. That does not mean the company cannot grow. It does mean that this is not a simple linear iGaming business. Traffic quality, search rankings, regulation, operator spending, and market openings all matter. So when investors look at Catena Media, they are not just looking at a casino stock. They are looking at an affiliate and digital traffic business inside the regulated gaming market. Now, let's put the stock chart on screen. At the time of recording in mid-April 2026, Catena Media shares were trading in roughly the mid-2 krona range on Nasdaq Stockholm. Market data sources around 13th to 14th of April showed the stock around 2.3 to 2.5 Swedish krona, with a 52-week range of roughly 1.40 to 3.80 kronor. Again, we are not showing the chart to make a buy call or a sell call. It is simply part of the factual picture. And in Catena Media's case, the chart sits on top of a very specific company story. A sharp 2024 deterioration, a 2025 cost reset, a much stronger second half, a business increasingly dominated by casino rather than sports, and an ongoing attempt to diversify away from pure SEO dependence. So what is the clean takeaway for episode 7? Catena Media is a publicly traded iGaming affiliate. For players, it is part of the gateway layer of the industry, that comparison sites, content hubs, and search results that sit between the player and the operator. For traders and investors, the latest official picture is a company in the middle of a transformation. Revenue in 2025 was still slightly down, but adjusted EBITDA improved sharply. Q4 was the strongest quarter since the reset began. Casino is now doing most of the heavy lifting. Sports is still weak. North America dominates the revenue mix, and management is trying to build a more diversified, more product-led business through MRKTPLAYS, CRM, loyalty, and tighter operational discipline. This was Catena Media, not a recommendation, not a financial advice. Just the company, the products, and the latest official facts. If you want us to continue this series, tell us which publicly traded iGaming company we should cover next.